Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we'll be taking a look at the key US stock indices, as we always do in our analysis, weekly analysis for this segment. This video is for educational purposes only and it is not a financial advice. Subscribers who are new, welcome to the channel, and those guys who are watching our channel regularly but have not subscribed, if you like our videos, I encourage you to subscribe. Thank you. Okay guys, so what we are looking at is the daily chart of the S&P 500 E-mini futures. If you recall in the video which we did last time, we were looking for a level which was around 42,035 and to be perhaps a little bit higher, possibly. We had really nice two bullish candles here, but what has happened since then is the market, when it opened up on Monday, it basically was not able to clear through the resistance coming from the structure, the high that was made on the 2nd of Feb 2023. And if we just look to the left, we had also pointed this out before, there is like a numerous amount of structural resistance coming around here, but the important one is of course the 2nd of February 2023 resistance level. So here today we had the Fed come in, and Fed did raise the interest rates by a quarter point, and now the Fed fund rates are in the range of 5% to 5.25 percentage point. So this was kind of already baked into the price, in my opinion, because of the consensus taking place amongst various forecasters. This was the kind of a range which was expected. And what the Fed also did is they made a key change in their statement, in which what they're saying is that they are going to be more data dependent, and they will look at the data and make an assessment whether they will need to raise rates further. This is quite a big change to the meeting which took place in February, and the statement there, guys, you can Google about it and you'll read. So from a technical perspective, what does it mean? What we are looking at here now is a range here. So the market is range bound. On the downside we have this 4066 level, and on the upside we have 4206. So it's about a 60-point range the market is trading in. So this was a little above the 38.2% Fibonacci retracement, this level. So just to remind everyone, let's have a look. There we go, when this level was taking place. So there we go, and this is where the market had retraced. And we had a really nice couple of days, really strong, when the market actually rebounded, and that had kind of led us to also come up with this expansion level, which is basically the market expanding this move here, this line segment here. This is the expansion which was giving us this target, and possibly even to 4278, but not entirely sure about this level. But for now, what we are watching is this trading range. If the market begins to take out these lows, then what possibly it means is the cycle that we have been watching, that might have come in a little bit early, and the level that we were really looking for, around 42.25 to around 42.30 level, that we might not be able to reach. So over the next few trading days, and we also have the non-farm payroll coming up this Friday. So this week has been full of action from an economic data perspective. So we'll be watching that. So range bound market, 60 points range in the S&P 500 E-mini futures. On the downside, this level of 4066, if the market is going to breach that level, then what we are looking at is a change in the kind of market structure coming into the marketplace. The other thing I would like to point out is that one of the things that we really look at in our analysis at market chart pattern is we look for something called asymmetry in the market. So what do I mean by that? So in what I mean is that markets tend to repeat themselves over and over and over again. So if we look at this line segment, the correction that's the major correction in this ABCD formation that took place here, it was of this much magnitude, roughly speaking. So actually, in fact, let me delete that. Let me just copy this. Here we go. And if we take this and we just project it from here, there we go, guys. This is the largest kind of correction here. In this recent correction that took place, it was fairly close as well. So this symmetry is still in place in this market structure, and because of this, for the market structure to change and we begin to look at more of a downside, this structure or this symmetry in the market needs to be broken to the downside. And of course, if the market breaks out to the upside and clears this 4206 level, we have these upper possible targets that the market could actually trade up to. And at that point, we'll begin to look at because we are also reaching these summer months, and there's a mantra, there's a seasonality aspect of sell and make go away, which not doesn't take always in place, but that sort of thing does exist. And if you look at the market has been going up since October 13th of October 2022. So we are reaching quite a while as well in with this respect, over a little 6 months in timing coming to this. So also one of the things is right towards the end, I will also cover the stock of Apple because we have the earnings coming tomorrow, and also certain levels the Apple is reaching, and it has so much weightage in these indices that we need to really also take a look at that stock in this video segment as well. So guys, this is what we are watching here. I think now is the time that we begin to pay more attention to these support and resistance level, and begin to watch for any possible change in terms of market structure and any market symmetry being broken. Okay guys, so let's take a look at the Qs, the NQ. So this is the daily chart of the NASDAQ 100 E-mini futures here. This market also actually reached and breached our target of 13,275. Then we had a further target, which was a confluence level of 1.618 Fibonacci expansion and 1.272, coming about 13,270 and 75 level. And here again, guys, we had a really nice ABCD pullback. And talking about the symmetry in the market, look at these corrections have been very symmetric here. Here we go. This one was the biggest one, so the market hasn't actually here we go, sorry, let me actually draw this here for you. Boom, let me clone this. And excuse me guys, here we go. So market hasn't broken out of this symmetry yet in this segment. So what it means is we will really need to look at this low here being broken to the downside. Here we go, change in structure, and of course our clues will begin to come when these lows are taken out as well to the downside. On the upside, what we have going on is here we go. On the upside, what we have is this resistance level, kind of a double top formation here. So again, just like S&P 500, a range bound market, and we'll have to wait and see which way this market is likely to go. On the upside, if it breaks, we have some upward target of around 13,660 to 13,700, roughly speaking. Okay, guys, let's take a look at the small caps. So this is Russell 2000. So this is the one where we have, a lot of issues, because issues in the sense of the price action not being as good compared to the other major indices like S&P 500 and the Tech NQ. So here what's happening is it has broken the support. So this is where we need to really begin to pay attention. In fact, this support level on daily closing basis has been held, but these are the futures which are overnight trading here. Looks like it's gonna go and perhaps take these lows out. We'll have to watch on the closing basis, but this doesn't look very a very good price action when we look at the small caps. Such a nice ABCD formation here. It went right to the targets we were looking at, and ever since then, which is the 2nd of February, it's just been pricing down. So not looking very good price action wise, and this is also a double top formation, at least in my books. It's underneath that, but it's close enough. So we need to watch these small caps, because these smaller stocks, where their balance sheets are fairly impacted by the interest rate sensitivity. So if interest rates are gonna rise, these companies might have to pay more in their debt service, etc. Let's take a look at the YM. So guys, this is the Dow Jones E-mini futures. So here it traded, it found support from 50% of this entire move higher, and what it has done is it's just traded back into the range, and now it's formed a double top formation here. Here we go. And here, I mean, for this thing to move higher and test the upper side of this range, it really needs to break above this level, 34,265, and to the downside, it appears that this was the level which might get broken. We have to watch this tomorrow and the day after, in terms of the price action, what it's likely to do. So where it is at the moment is right at the 38.2% Fibonacci retracement, and it begins to close below this level, around 30. There's roughly around 33,300, roughly speaking. That's gonna be not good price action, and could open up lower prices. So let's take a look at Apple, particularly for Dow Jones, because there's a Dow Jones index is price weighted, it's not market cap weighted. So what it means is that stocks which have got a higher price, when they move, they impact Dow Jones quite a lot. Apple is a component in a lot of these stock indices. It has a good weightage in that. So with earnings coming tomorrow, there could be a fair amount of movement in the stock indices. I believe the earnings come after the close, so we'll have to actually wait and see till Friday with the non-farm payrolls what's going to happen. So here what we were looking for was a price target of $171 to $175 per share level, and we have pretty much reached that level, and it is trading in this channel formation to the upside, and but there is another pattern formation here. So we really like to see these ABCD formations here. So here we go, there, right there. We have this ABCD formation, and then we also have some Fibonacci expansion levels. So it is so tiny. It's right at the 1.272 and 1.618. I will go with 1.272. I'll just leave 1.618 there. And we also have, let me see if there is expansion of this level. And yeah, it came so close to 1.272 of this level. So roughly speaking, there is like a wedge formation here. So I'm gonna actually change it to a formation like this, rather than having a parallel channel. It's more like a wedge formation if I join this. And also what we have is a one touch, two touch, three touch. So it's like three drives to a top pattern formation. Here we go. Drive one, drive two, drive three. So it's got a little pattern formation there as well, and all of this is underneath this top, which formed on 23rd of August 2022. It's kind of in the our pricing zone. There's a possibility, even with the really good earnings coming out of Apple, that there might be a nice gap up in the price, and we'll have to see how it might close. But the pattern is telling us that we need to be watching the price really carefully, because there's a possibility if the pattern formation takes place over the next few trading days after the earnings are out. Even with good news, there could be bad price action, because Apple is reaching our kind of the target zone that we had been looking for, even on the weekly time frame basis. So apologies guys for the video being a little bit longer. If you like how we look at the market, how we look at how we do our analysis, do please subscribe to the channel. And if you like the video and found it of educational value, then please do hit that like button. And if you want to be you want to know when we produce the new videos and you get notified, then please do smash that bell icon button. That way you will get notified. So thank you very much guys. Good luck and good trading.